pay attention to this verbiage that is about to be made mainstream, and that is the third mandate. They are about to use this verbiage to convince you and convince the market and convince everybody that the Federal Reserve's third mandate is to control the yield curve. That is what they're going to do, and that is going to start happening today. It is going to be the news when the rates get cut, when all of this starts happening. You're about to start seeing the third mandate, or the third mandate. We're going to use a triple money years, right? Third mandate as the talking point of the Federal Reserve. Look, they want to. So far, the Federal Reserve has been, focusing on keeping inflation at 2% and keeping and maintaining high employment levels, right? So what they need to do is add the third mandate so that they can convince the world that their job is to actually maintain stable rates, and that's what's going to happen. I want you to keep an eye on this, because what this is going to lead onto from here is the ability for the Fed to basically control the yield curve to maintain a specific level of rates, and basically allow them to do what they need to do and raise and lower rates appropriately at a faster pace than they have done. Why this will be positive for Bitcoin is very, very simple, because the business plan so far for the Federal Reserve and all of the US has been, we print money, debase the dollar, shove it into real estate, and therefore it won't be, or equities or whatever else, basically real estate and equities, because then it is not volatile. It is not moving, right? The velocity is really, really low on that capital because it's shoved into the right place. This is why they give capital and borrowed capital to the wealthy a lot easier than they give it to poor people, because poor people take it and they go spend it. Rich people take it and they go put it into investments, right? So that's what that's what's been happening, and the M2, the velocity of M2 has been declining at a rapid pace, and this is what allows them to basically print money and shove it into assets, inflate those assets, and then not have to face the inflation of the currency. And then 2020 was an experiment to see what would happen if we just gave this to people. And guess what happened? Exactly what was always going to happen, which is the morons went out and spent it and caused a little bit of inflation around the world. So they had to taper that back. They've tapered that back now. The Treasury balance sheet has been compressing. Now that they've tapered that back, they're now gonna, basically it's business as usual here, and the third mandate is going to be yield curve control for the United States, so that they can continuously release liquidity into the market, and then they don't have to worry about convincing anybody else of doing that. And these are now Fed chairs that are now saying this stuff, right? So this is not conspiracy on YouTubers saying this, right? This is the Federal Reserve is starting to say this, and the media is about to jump on this, and you're going to see a concerted effort to convince you that the Fed's third mandate is to control the yield curve, which allows them to continuously and forever increase liquidity in the market and pump my damn bags. And that's what I want. That's what I want them to do. I never want to sell any of my assets. I want them to pump my damn bags so that I can go borrow money against my damn assets and then go and turn that into whatever I want to turn it into, which is probably going to be more assets, right? So that's the game plan. It's been working with real estate. Can't do it with real estate anymore because everyone is fed up. Nobody can afford a home. They're going to jump off a cliff and they're going to come and revolt if you continue pumping real estate prices. So real estate prices need to stabilize out and allow wages to catch up. As those wages catch up, people can afford real estate again, and kind of like the peasants are happy, right? So you want the peasants to be happy in this whole process, and how you get the peasants to be happy is move the focus away from real estate and the assets that they can't afford anymore, the peasants can't afford anymore, but they need, right? That's really the issue here, right? So equities has been a good one because the peasants don't even think that they need the equities. You basically inflate assets, and then the things that the peasants need to survive don't need to get inflated. The problem happened is like the things that the peasants need started inflating, and so you had to rein that back in before you cause some kind of revolt. So now that that's been taken care of, they're going to go and they're going to find a new asset to shovel this capital into, shovel this liquidity into, and that asset magically is going to be Bitcoin. So that and why Bitcoin? Because it's the perfect asset to do this with, right? Nobody really needs it, or rather, peasants don't really need it. People with money absolutely need it. The smart peasants will figure out that they need it, and they'll buy it. And Michael Saylor had a great quote on this, which is that Bitcoin is a unique asset. It solves the problems of the poor and the rich at the exact same time. And that it's one of the truest things ever said about Bitcoin, and it's absolutely fantastic. And basically, I can print unlimited amounts of liquidity, send it around the world, put it into Bitcoin, and it stabilizes it because the velocity doesn't do anything. People, as they create these tools and strategies and ETFs and treasury companies and everything else, these things are like a black hole for Bitcoin, right? The beautiful thing about the MSTR and all these other treasury companies is you can trade the stock of the treasury company, but the treasury company is not trading its Bitcoin. So it creates some stability in the market, and that's what we've seen. We've seen the price get stabilized of Bitcoin. We can't push it down no matter what we do, and therefore it's a perfect asset. It's proving to be a perfect asset, and creating a network around Bitcoin is the way for them to print unlimited amounts of liquidity and send it around the world, find its way into Bitcoin. Bitcoin stabilizes, the value of Bitcoin goes through the roof. There's a reason why Larry Fink is telling the media at Davos, the last Davos, that this is a direct quote from Larry Fink. Nobody should be surprised if Bitcoin is $700,000 a coin. Nobody should be surprised if Bitcoin is $700,000 a coin. Casually just looking at the interviewer in the face and telling them exactly what is going to happen. This is why I like to listen to the people that make the actual decisions, not the people that are running around liquidity like they're desperate crack whores, right? You want to study the people that are actually able to make the decision to move things forward. And what they are saying is nobody should be surprised if Bitcoin is $700,000 a coin. And then what you see is the Fed has a third mandate. By the way, with the jobs revision that happened, right? Apparently there's 1 million jobs that they counted for that they shouldn't have counted for. With the jobs revision that's happened, you've now known the Fed not only has its mandate, the Congress has its mandate, and the Treasury has its mandate that we need to stimulate the economy. They want to try and get the ISM up above 50 to create some confidence in the economy. And as they do that, you're going to look at a 12 to 18 month cycle of an ISM being above 50, which basically is going to mean balls to the wall bullishness going on. And of course, as much more of that capital that can be shoved into Bitcoin, the better it is, because that extra liquidity can come out, be put into assets like Bitcoin. And by the way, as you can see, it's all very strategic, right? First, you have to get into the idea, into the populace, that Bitcoin is digital gold, right? Why is that important? Because gold is this asset that you just hold, you don't do anything with, you don't move it around the world, you don't create velocity, you slow it down, you leave the capital's just there. It's gold, just leave it alone. It's not like we can move it around the world in an instant eye flash. As long as you leave it, it is digital gold in a portfolio. And now, once you have the digital gold argument set up, you can now move on to, now we're going to use stable coins. So then that came next. The stable coin argument came next. You got all the stable coins in the world going off. You got the US dollar, the euro, everyone doing stable coins. And what's a fundamental part of stable coin in the US? Bitcoin, right? That's going to stabilize that investment. And then next is the third mandate. All that liquidity buys US treasuries, they buy Bitcoin, you stabilize the currency, you pump the price of Bitcoin instead of pumping the price of real estate, and instead of pumping the price of equities. Equities, I think we're moving into a world where it's going to be Bitcoin and equities rather than Bitcoin and real estate. And by the way, this will be a great thing for the normal person. I've said this for years, and that is that normal people will actually have houses back to live in without being completely and utterly destroyed buying those houses, right? So you'll start seeing wages go up. You'll start seeing real estate prices stabilize. And as that happens, this spread is sort of cut closer and people start feeling better and they have a house to live in, so they're not out in the streets revolting and stuff like that. So it's actually going to work out, I think, quite well here. So I'm pretty bullish about this. I'm not negative about what's about to happen here, but there's going to be people out on the internet and everywhere else telling you, oh, they're about to create all this liquidity. Yeah, it's going to get shoved into Bitcoin. It's shoved into new assets every 40 years, and now it's Bitcoin's turn because real estate has been completely, utterly juiced out, and now you got people that can't afford a home. So we need to balance that out. How do we balance that out? You basically go through the process of digital gold. It is digital gold. You must look at it as a gold allocation in your portfolio. And the good news about that is, it takes care of the first $4 to $5 trillion that needs to be printed, because as that liquidity comes in, they're pitching a 4 or 5% Bitcoin allocation to people. And then once that happens, you've got that taken care of on this side. You've now got US Treasuries. So now the stable coins, as the capital gets printed, puts into stable coins. Those stable coins are putting, a certain percentage into Bitcoin, and that stabilizes that. And then once that happens, you can now go yield curve control, balls to the wall, unlimited liquidity, and you have a perfect storm for nobody should be surprised if Bitcoin is $700,000 a coin, as if this is all just one random domino after the other. And it is in the moron mind. But if you're paying attention, you subscribe to the channel. I've been saying this for 2 years now, that this is going to be the game step plan here to bring Bitcoin to. Nobody should be surprised if Bitcoin is $700,000 a coin, because ultimately there's always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.